G'day, Binanceans, and welcome back to this week's episode of Binance Beach. I'm joined by Protocol Theory founder Jonathan Inglis. We're going to be talking about how Aussies build crypto wealth. And rather than speculating or talking big ideas, we're going to be actually looking at the latest data that Binance has commissioned in partnership with Protocol Theory and diving through some of that in today's session. Jono, mate, welcome back to the show.
Good to see you again, Liam. Thanks for having me.
Now, we recently saw you at OzCryptoCon and you shared the stage with James and Seka from Binance. How was the convention? Any reflections? What did you take away from the market this year?
A few takeaways, actually. I thought the event, first and foremost, was it was an awesome event this year. For those that have never been or have considered going but haven't made it yet, definitely try to hit up the event next year. Yeah, I thought the energy was really good, especially, didn't know what to expect. The market was a bit down, going into this year, so didn't quite know what to expect. But I thought the energy was great, the vibe was great, the atmosphere was great, the conversations were, excellent. Lots of engagement as well, especially, with those panel conversations that we had with yourselves and several others that we had as well across the 2 days. Yeah, I thought it was a really good event. The Aussie crypto market is healthy and strong and continues to go from strength to strength.
100%. The industry was strong too. And this year there were a lot of new businesses there that weren't there last year, like a lot of new exhibitors, a lot of new speakers. It was great to see. And I think last
Yeah.
year too was right around that Bitcoin all-time high. And so there was a lot of euphoria in the room last year. But this year, with the market a little bit down, and particularly with a bit of a dump in the weeks preceding the event, it was just calm. People who were really interested in the industry, who've been there for a little bit longer, and who were just asking really
Mm.
good questions and having really cool chats. It was a great energy on the floor.
Agree. I
Now,
sort of half expected to walk in and see a bunch of depressed faces, but no, we didn't. We didn't get that, which was great. And to your point
uh,
about the other brands, there were definitely a lot of international brands, a lot more international
mm,
brands coming to the market that were doing some activations and whatnot, which was interesting to see.
100%. It's great. Dave did a great job. Dave and the team did a great job of bringing more to the industry this year. Now, today's session, like I said, we're going to be rolling through some protocol theory research commissioned by Binance on how Aussies are building crypto wealth, what they're buying, what their goals are in doing so. What are the convictions? What else are they buying? What tokens they favor? And then what non-crypto users might be looking for to enter the industry. But before we go into the data, do you want to talk quickly about your research practices? Like, how do you go ahead and prepare a report for a client like Binance? How do you collect this data?
So we collect data through a variety of methods. It really depends on what is the objectives of the research, what we're trying to find out about people. Fundamentally, that's what we're doing, right? We're trying to find out information from consumers, from end users, the people that actually use these products or that we want to use these products. So depending on the specific research objectives, we use a variety of methods. Most of what we do, though, is based on large scale, nationally representative surveys, right? So we do this in a very, very rigorous way. We apply best practice techniques and methodologies to this. Doing survey-based research, there's a lot more to it than just firing up a survey monkey, I guess survey and sending it out to your mates. There's a real science behind this and a real science behind how we go about it and design the research. So yeah, fundamentally, most of our work stems from survey-based research from nationally representative and very large samples of people. In the case of obviously the research that we did with you guys, there was about 1,600, give or take, 1,600 everyday Australians that we spoke to, which included a mix of crypto users, non-users, people that are considering crypto but have never bought crypto. So a very, very much a broad and representative cross-section of the Australian landscape, basically.
Cool. Let's get into it. The first question I had for you is which Aussies are buying crypto compared to other asset classes? Do you want to talk to this slide a little bit?
Yeah, I mean, you can see the stats on this slide, right? So the first thing that really stands out, so the yellow highlight, the columns that are highlighted yellow, right? That indicates the percentage of crypto ownership across each of those age cohorts that you'll see at the bottom there of the chart, right? So on the left-hand side, you see 18 to 34. Those are 18 to 34-year-olds. They have 30, so amongst 18 to 34-year-olds, 32% of them currently own crypto. Within the 35 to 49-year-old cohort, 27% of them currently own crypto. And then as you can see, over 50, between the ages of 50 to 64, much lower rate of adoption, about 8%. So clearly it skews younger, right? I think we probably already know that. There's a very sharp drop off, right? So this is showing these very specific buckets of these age groups that we're showing here on this chart. But if we actually lump some of them together and look at it a bit differently, if we look at, for example, 18 to 39-year-olds, crypto ownership is about 36%. That's for 18 to 39-year-olds, 36%. Once you get from 40 and above, so those aged 40 and over, it's about 17%, right? So almost double the level of crypto ownership amongst 18 to 39-year-olds versus those that are older, 40 and older. That's just one of many sort of interesting stats. But what's also very interesting is that, again, it's not actually reflected here in this chart, but ownership is one thing, but like how are they actually engaging with it? And what we find is that when we look at 18 to 24-year-olds in particular, so the very youngest demographic cohort, they tend to be much more actively involved in crypto. So they're actually like actively using it. They're trading, they're swapping and doing all kinds of those on chain. About 53% of those between the ages of 18 to 24 are what we call active users. So they're actively using versus those aged 30 to 39-year-olds, only 39% of them are active users, right? So 53% for the youngest cohort versus 39% for those that are aged between 30 and 39. So active usage tends to skew much younger as well. The other thing you see is there's even across each of these three age cohorts, all of them are engaged in multiple asset classes. We'll probably get into this once you, because I think you had a question around that. So we'll get into that in a little bit more detail. But what we find is that crypto users in general, like they do tend to, it's not they're not one asset class sort of investors, right? They tend to invest across a wide array of different asset classes, and are actually more likely to own, all kinds of other asset classes in addition to crypto as well. So, skews younger is one key finding. There's a lot of other interesting things there to unpack, but those are just some of the, I guess, the call outs.
100%. And, I think the fact that it skews younger is probably not a massive surprise. But I think this one is a pretty interesting question. Why are people buying crypto? What are their goals in investing in this asset class? On the left here, obviously saving for retirement at 50%. Now that I think is interesting because our demographic does skew young. So maybe that's just like an easy general answer and people can like go to that as definitely like saving for retirement. But for the young skew of crypto, it's interesting that is a focus. Aside from that, growing wealth for future financial security, generating passive income, traveling experiences, and emergency fund. Any color to add to this one?
Definitely. So what we're showing here is the, I guess, motivations for investing in crypto across all age cohorts, right? We've sort of lumped them all in together. And so naturally, you're going to have, the influence of, the older demographics. It's sort of bundled up with, with the younger cohorts. When you split them out, though, which isn't shown on this chart here, when you split them out, you actually do see a little bit of a difference, right? So the three main reasons, the three main motivations are still the same. It's basically growing wealth for future security, it's saving for retirement, and it's generating passive income, right? Those are actually the three core motivations across all age cohorts. But the relative importance of each of those does actually differ across age groups. So when we look at younger demographics, for example, those between the ages of 18 to 39, again, the kind of like predominant crypto ownership group, the main motivation is actually growing wealth for future financial security, and about 44% of them cite that as their main motivation. When you look at those aged 40 to 64, so the older cohorts, it's saving for retirement. And about 62% of them indicate that that's their main sort of motivation. So there are some nuances to this, definitely some nuances, and as you would imagine, they do differ by age group. So you can unpack this quite a bit, right? And you can get quite a bit of color and context when you start looking at those differences across age groups. But yeah, broadly speaking, they're similar motivations: saving for retirement, financial security, growing wealth, and passive income.
I'm surprised to see purchasing a home and major life events be as low as they are on this chart. Maybe the ownership rates are a bit higher than, particularly in those older demographics. But I know I feel like anecdotally when I talk to a lot of our users, when I see them at things like ACC, that seems to be something that comes up a lot in conversation is for our younger demographics, like those major, financial milestones in life. So I'm surprised that that's not a little higher, but maybe it's just a case of that all of the demographics being lumped into one, right?
Yeah, I mean, if you look at the percentage of the respondents that we had, right? So again, it was a broad representative mix, but I think the population of those age 40 to 64 is actually a bit larger than the population of those age 18 to 39. So the influence of them is going to be kind of like, I guess it's going to be, they're going to be disproportionately contributing to these numbers, which is why it's important that you split them out by age group. Again, when you split them out by age group, you would see a similar story, right? So what you would likely find, and we've got the data, but I don't have it off the top of my head, unfortunately, this time around, which is a rare occasion for me. But almost certainly what we would find is the younger demographics, again, in terms of investing for a property, purchasing a family home or an investment property would probably be of much higher importance than it would be compared to those that are older, right? That have probably already acquired an investment property, and it's obviously like less of a motivation for them. So again, that sort of nuance you would definitely see when you start to tease apart these different age cohorts. What's really interesting, by the way, I wanted to add another stat into the how are they buying the crypto versus other asset classes. There's a really interesting stat that, again, it's in the data, but it's not reflected here in these charts. It's a bit of a headline grabbing statistic, to be honest, which is that if you look at 18 to 39-year-olds, 18 to 49, all the way up to 49, so essentially up to the age of 50, they're more likely to own crypto than they are investment properties.
Really?
Right? Like, Australia has such an infatuation with investment property. We all talk about investment property. It's like it's a bit of a dream, right? An aspiration for many of us. But when you look at the statistics of who's actually, who are the investors and holders of these asset classes, 32% of those between the ages of 18 to 39 own crypto. Only 21% of them own property, investment property. With the slightly older cohort, 40 to 49, you'd imagine more likely to own investment property, right? It's actually similar. It's about 20 to 21% own investment property and 24% own crypto. So below the age of 50, so 18 to 49, Australian investors are more likely to own crypto than they are investment property, right? That's actually pretty significant, right? Given that investment property has had a very long head start over crypto as an asset class. There's obvious reasons for this. It's a lot more accessible, a lot more liquid, right? It's easy to buy in small amounts, etc. But
that's a great headline. Actually, we should definitely work on an article for that together. I mean, I guess that key call out there is how easy crypto is to access. You can buy a bit of a Bitcoin for $25, right? You don't need a whole one. But that is super interesting. It's definitely super interesting. I mean, this slide was interesting too, and I think speaks to the propensity for crypto investors to be investors in general, which in Australia, investing is such a part of our culture, right? We tend to be good investors, I think, generally speaking. But what did this say to you? What did this slide say to you in terms of how crypto investors think about other asset classes as well?
I think probably the surprising or maybe counterintuitive, maybe unexpected for some of the listeners, I guess, key insight and takeaway here is that crypto. So what this is showing, just to be clear, so for the listeners, the darker column here is showing the percentage of crypto owners that hold that asset class. And then the lighter column is showing the percentage of general population that own that asset class, right? So if you just look across all the asset classes, the implication is quite clear, which is that crypto owners are always, across every asset class, they're more likely to hold that asset than the general population, right? Which is interesting because there's kind of this, like, still there remains this perception that, crypto investors and crypto users are these, degen-y, young, irresponsible, reckless, kids in their, basement somewhere, like trading away and doing all kinds of degen-y stuff. That's not the case at all. Crypto investors in Australia are actually quite sophisticated, and they're more likely to own all of these asset classes. They're more likely to have stocks and shares. They're more likely to have exchange traded funds or property, real estate, bonds, fixed income, etc., than are other members of the general population. So this really dispels that idea, this myth that people are just like longing into crypto and just being a single asset class sort of reckless speculative investor. That's not at all the picture that we see in the data.
Yeah, I mean, the Bitcoin maximalists might be a minority there, despite the fact that they're a very loud group in crypto. This is a similar slide, so we might move past that one. I think this was an interesting one. Crypto users are far more likely to view crypto as an empowering and opportunity rich. What does this research tell us about the conviction that Aussie crypto hodlers have in their investments?
Yeah, I mean, it says a lot about their conviction, but I think it probably says something even more important, which is the perception gaps that need to be closed in order to, encourage more uptake and more investment in crypto. So if you look at again, similar story as what we saw before, the darker columns indicate the percentage of crypto users that agree with each of these statements. I don't know if the listeners will be able to see these statements. It's quite small, the text there, but it's a percentage of crypto users that agree with each of those statements. And then the lighter columns is the percentage of the general population that agree with those statements. And so if you look at the tail end of this chart, you'll see where they really differ, right? So for example, crypto, the second one from the right, cryptocurrencies are a secure way to store value. And then moving to the left, cryptocurrencies offer an attractive balance between investment risk and potential return. The next one to the left, cryptocurrencies are going to become a mainstream medium of exchange over the next 5 years. So there's very pronounced differences in perceptions and level of agreement with each of these statements across crypto users and the general population, which indicates the gaps that need to be closed, right? These are often the barriers that prevent these perceptual gaps are often the barriers that prevent non-users from actually getting involved in crypto in the first place. They need to be educated around some of these perceptions, I guess, these perceptual gaps. So cryptocurrency, for example, it does in fact, objectively speaking, offer an attractive balance between investment risk and potential return. This is not financial advice, right? Of course, but there was some research published by, I think it was Fidelity. We might have even spoken about this on our last podcast. Some research by Fidelity that showed that, objectively speaking, when you look at the level of volatility and the level of risk versus the level of return that's been achieved by crypto over the last 10 or so years, crypto far outperforms other traditional asset classes. That is an objective fact, but it is not something that is widely recognized or widely perceived, right? Certainly by non-users. So I think the real insight here is some of the gaps that exist between crypto users and non-users. That speaks both to the conviction of crypto users, but also speaks to the opportunity to educate and inform those that have not otherwise had the opportunity.
On that second from the right, cryptos are a secure way to store value. It's similar and related. One of my favorite things to do at the moment, I've been doing it a little bit, is taking just a cold wallet that I haven't set up. It's got no funds on that, but taking a cold wallet around when I go to meetings with partners or people who are crypto interested, crypto curious, or who are not, super into the industry, but might have bought a bit of crypto, and showing, bringing some tangibility to this idea that is Bitcoin and crypto. I'll be like, hey, this is a cold wallet. This is a super secure device. This is air gapped, or this one is, this is how you store crypto offline. And it's very secure and XOD, and then you can kind of start a conversation around crypto security and crypto storage. It's fascinating to watch people go, oh wow, and then the kind of light bulb moment there when you're like, you could put $1 billion on this little tiny stick, right? That might not be the the best risk adjusted storage strategy, but you could, right? You could put $1 billion on this tiny little stick, and you watch people kind of go, wow, that's such a fascinating idea.
Totally.
All right. What tokens do Aussies favor? What are we buying? This was probably not a huge surprise, to be honest.
Again, when you look, this is looking at crypto users overall, right? So when you're looking at it in aggregate, it's fairly expected, right? There's nothing terribly surprising here. Bitcoin and Ethereum, continue to be the mainstays and the main entry point for most crypto investors into the crypto market. So it's no surprise that we see them dominate. 70% of crypto users in Australia hold Bitcoin, and 42% hold Ethereum. That is by far greater than all the other individual tokens or coins sort of combined. And then you can see those other categories there. So 25% hold other major cryptocurrencies, like typically layer ones. And then you've got meme coins, 20%, and so on. 18% have stable coins at any given time. So, and NFTs and so on. Where it gets really interesting is when you start to unpack this and you look at different subgroups, right? So if you're looking at, for example, more experienced crypto users and investors versus newer crypto investors, like what would you expect to see, right? If we look at those that are newer to the market, less than 6 months or less than 12 months, say, they'll skew much more heavily towards Bitcoin and Ethereum. And then if we look at more experienced crypto users and investors, you would start to see a lot of these other asset class or token classes like utility tokens and stablecoins, DeFi related tokens, etc. The incidence of ownership there would increase. So there's a lot of nuance even sitting within this, right? It's about unpacking it kind of in a lot more detail. But at a high level, yeah, I mean, Aussie crypto investors love their Bitcoin, right? It's no surprise.
In terms of stablecoin adoption over time, this is something you might only be able to speak to just from your own observations, but do you feel like you're seeing stablecoins as a segment of crypto ownership really starting to tick up, or do you feel like that has been a fairly constant share over the time that you've spent doing research in this industry?
That's a really, really good question, Liam. The answer is yes, we definitely have. So the hype is real with stablecoins. It's obviously been the predominant narrative over the last 12 months in the crypto industry broadly, like globally, not just within Australia. Okay, so within Australia, not so much. Like, yes, there's been a little bit of an increase in stablecoin engagement and adoption within Australia, but globally, it's we see a much greater uptick in terms of adoption. So we actually recently published a report with CoinDesk. I think it was called the 2025 APAC Digital Adoption Report, and we had an entire chapter on stablecoins. In this study, by the way, we surveyed over 4,000 consumers across 10 markets in APAC. Australia was one of them, but also included like the likes of Philippines, Singapore, Hong Kong, China, India, and a bunch of others. And across a lot of these markets, particularly emerging markets, we see quite an uptick in stablecoin adoption and usage. Stablecoins have been around for a long time, right? So like, what's driving it all of a sudden? A lot of it's been one of the key theses of that report is access. And so a lot of what's driving that is like the need has always been there. So particularly for those in emerging markets that tend to use remittance services quite extensively, and those are very expensive through traditional channels. Stable coins can provide real benefits for them, and those benefits have always been there. But what's changed, especially in the last 12 months, is the types of products that they can access stable coins through. They're becoming a lot more user friendly. A lot of the complexity is being abstracted away, which is obviously very necessary. So access has become much better for stablecoins, and hence that's what we see as driving adoption in a lot of those markets. Australia, there's not as much of a need for things like international remittances, etc. So the stablecoin use case, while absolutely still there, is not quite as compelling as it is in some of these emerging markets that have less developed financial infrastructure, for example.
Yeah, and I feel like we're just maybe still a little early domestically on stablecoins as well, right? Like when we were at the Blockies Industry Awards a week or two ago, there were a lot of stablecoin issuers there that have had really key milestones in 2025 that won't turn into products or won't turn into products that users are using at scale until 2026, 2027. So it feels like there's a lot in that space that is coming down the pipeline. We've also seen the first couple of Aussie dollar stablecoins get listed on exchanges, and obviously exchange access is such a gateway for huge volumes, like for access at scale. So I think there's quite a lot that's coming in the stablecoin space that we might see hit domestically in the near term.
Completely agree. There's also, by the way, if I can just add, conscious of time, but there's also this thesis of like bottom up versus top down adoption, right? You probably haven't heard that before, but what I mean by that is bottom up adoption is like consumer led adoption, right? So we're really looking at consumer adoption of stable coins and how many are using it, why they're using it, etc. Top down adoption is more like stable coins being imposed on consumers, right? So think about, like, for example, mobile payments. That was not something that consumers were like asking for. It was just something that there were benefits to the businesses that were adopting it, right? It allowed, it facilitated easier payments for your customers. They could, you could increase sort of customer turnover, and there may be some merchant fee benefits or something. I'm not sure, but there were benefits for the businesses, and so they enabled that feature. Consumers it was easy. It was just there. It was an option, so they just kind of took that option, right? It was a convenient option. So I think what we're probably going to see, especially in some developed markets like Australia, is stablecoin adoption may very well be more top-down led, right? It might come from businesses first, institutional, and then also, SMEs, which then in turn leads to increased consumer adoption. Hopefully by that point, everything has been abstracted away and they don't even realize that they're using stablecoins, right? So that's another thesis that we're expecting to see play out, but yeah, it remains to be seen.
Yeah, so that's such an interesting dynamic to see start to enter the crypto space, because I would say that crypto is the story of bottom-up adoption, right? Like these are products that people have used that have been hard to find, hard to use, risky. Like you think about the early days of Bitcoin, the early days of a lot of this sector, it was not necessarily an easy or a safe place to store your value. And as these products, as these protocols have built network effect, have built value, have built have been contributed to by countless numbers of businesses and user feedback, like this has built the wave. It's the story of bottom-up adoption, but I think that's such an interesting point. We're now at a stage where we have enough regulatory attention, we have enough institutional attention that we might start to see some of those impacts kind of start to come the other way, come top down. That's super interesting. Let's close with what's going to bring the normies across. What are non-crypto users looking for in order to enter this space and start using these tools?
Yeah. So there's all the obvious things, right? Actually, so before I even answer that question, I'll preface by saying that, like, what is the general attitude of non-users in the market? So those that have not yet adopted crypto, the attitude is they're curious, but they're cautious, right? So amongst those that don't currently own crypto in the Australian market, I think it was 47%. I have to check on that, but I think it was 47% of non-users are either actively considering crypto or they're open to it in the future, right? The other 53% are either just not really, they're just disinterested, they just don't really care, or they just outright reject the category. But essentially about half are either actively considering or are open to it. So it's a big chunk of the population. So what are they looking for? So again, to my point about access earlier, that's a key theme of or a key pillar of like what they're looking for. We can talk to all the other things, like obviously trust, right? They need to trust and kind of like understand the asset class. They need to have some trust in who they're buying it from and how they kind of interact with it, etc. Those are all the obvious table stakes. But what we found in our data here is that they have a preference for, and this is absolutely fair enough, right? They have a preference for engaging with crypto when they invest, or if they invest in crypto, they want to engage with it through their familiar channels, right? So we're all familiar with traditional banking. We're all familiar with, most of us are familiar with superannuation and the superannuation system and our super fund, traditional fund managers. And the other thing is that a lot of these institutions already have a lot of inbuilt and embedded trust, right? So there is real appetite for engaging with digital assets through some of these other channels. How that will play out in the market remains to be seen. I certainly don't see any of the big four banks rushing to offer crypto services. We see a little bit more internationally, particularly in the US, for example, with the new regulations that have brought a lot of clarity. But that's not happening here yet. But basically what other than the table stakes of, trust and safety and security, and they want to know that they want to have some peace of mind. They want to understand it a little bit and understand the benefits. But outside of that, they just want it to be easy and convenient. And often that means, but not always and not exclusively, it means they want to be able to just buy it through their familiar channels, right? The same way that they buy other, investments and asset classes.
Some absolute alpha there. Let's finish with closing thoughts on the Aussie crypto market for 2026.
I'd love to hear your thoughts too on this one, Liam. But look, the crypto market 2026, a lot of it's obviously going to be driven by, market movements and sentiment and whatever happens. Who knows where we're at in the cycle, if cycles are even a thing anymore. There's a whole conversation around that. But look, a lot of this is going to be driven by, as it always has been, it's going to be driven by sentiment and market movements. But in generally and more structurally, like Australia continues to be an incredibly attractive market with a sizable both a sizable crypto population, about 4.5 million Australians currently own crypto, but an even bigger opportunity with about 10 million, give or take, Australians, open to crypto or actively considering crypto. So the market is large. It is active. It is, a market with a lot of commercial potential. And there's still a lot of innovation happening across the Australian, crypto landscape, which is always awesome to see. So yeah. Here's to a fantastic 2026, and yeah.
Yeah, for sure. I'm really hoping that 2026 is the year that Aussie crypto users get access to more and better products. Like from a Binance Oz perspective, right? We launched margin last year. We were able to bring back launch pool this year. We've had on-chain yields just go live. There's a bunch more in the pipeline that we've got coming from a product perspective, which is super exciting. And it's what users want, right? When we meet users at events, when we go to OzCryptoCon, people are always asking us, when are you bringing out this? When can we get access to this? We know that, these products exist and we want to be able to use them domestically with, trusted onshore registered exchanges. And I'm really hoping, and I'm pretty bullish that 2026 is the year that a lot of progress is made in that area. And we see a lot of really cool products coming to market that people are able to access and use. All right. Thanks so much for jumping on, Jono. Always good to chat, mate. You're an absolute resource and heaps of alpha in there for anyone who wants to learn more about the industry. Yeah, really great having you on the show.
Thanks, mate. Really appreciate having me again.
Cheers, guys. Please make sure to like and subscribe, and we will see you next week. Have a great weekend. Bye. Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance. DYOR Binanceans.